Yo, 365, shake my hand. I hope you can hear me loud and clear. Welcome to another video. We are looking at the NZDCAD. Potentially, this is asset number 38 since I started this journey roughly in the middle of the month of April. And I wanted to start off with this. By the way, there's a link down below, a new link in all my videos, starting from this one. I'll try and put it on the previous videos where you can add your email address, an email address that you actually will open, an email address that you use, and it will come from, you know, a MailerLite, right? And I summarize these assets after a while. So after I've done about 10, 15, and it's now the weekend, I'm going to take some time to break down everything that I've been saying in the last few videos into a comprehensive document about what I'm looking for, stop loss areas, entry points, asset by asset, as given inside the video with a long-term perspective, so that you have the stuff, so that in December, when we're now reflecting about what I said and what the markets have done, you will only by then only start to appreciate and, you know, hopefully understand the value of what 365, you know, Trading Academy is offering to the game. I want to pull out just one because of time, man. Gold, right? So, you know, it's chopped up because I just pulled up a PDF of the same version of the email. But it's a little bit neater when it arrives in your email, right? So I wrote gold on the 12-month chart is very bullish and will remain that way for a long time. When we look at the 3-month chart, the price is sitting at a major turning point supply. We should expect to see some sell pressure. We should also be aware of the fact that gold has a tendency over time to removing, you know, major turning points. The October 2022 3-month chart demand is currently pushing through the opposing area of value, which is the 3-month supply of April 2022. So it's basically saying price is fighting through an April 2022 presidential supply. Then I said on the monthly chart, we see the governing supply is still intact, but the monthly demand is also at play and pushing distal breaking point of that. And this is what you're going to start to see in the in news media articles. In fact, I saw three about 2 days ago, so I thought I should bring this up, where people are talking about gold's breaking through, gold's going to hit major, no, they don't talk in major turning points. In media, they're going to say gold is going for an all-time high. Look out for media articles about, you know, all-time highs, and this is basically that distal point I'm talking about here. Now, looking at our weekly time frame, we see the buyers have also created a weekly demand buy zone inside the monthly, weekly supply zone. So there's a lot of buying inside these sell zones, which could signal a serious intention to at least break the supply, even if price does sell up for the next few days, 2 weeks. I sent this out in the 2nd week of April, just for context. I generally never buy in a weekly supply. Distal point to watch out for this demand is 193672. So distal means support, stop loss, right? Distal is my stop loss. After that, we can wait for better longs, lower, unless they open up, you know, that distal supply. The daily time frame next, say fresh available demand is at the proximal line of 1917.69, and I took a screen grab and I posted it on the YouTube community post to show you how well gold did at the same time when USD JPY, you know, moved up. I remember I'm still like really trying to avoid sentiment analysis, although I've already picked up quite a lot, you know, just when you come back into charts. And also I've got a whole host of traders always around me, so they're just talking about, you know, interest rates and all that kind of stuff. So it's not like I'm completely in the dark with sentiment, but I've really tried to avoid it as much as I can, right? So I'm just trying to find out where I said you guys should look for buys. 1917.69, just to kind of like give you the an idea. 1917.69. So we're going to look at where the blue line is. 1917.69. Right, so this is this fresh area of value, and I'm saying to you guys in this whole thing, if you read it properly, that we're going to have to wait for price to open up these supply. So if this gets opened up, if price pops this supply, remember this is going to be a major turning point, right? If price pops this supply, then we can expect some sell side pressure, and I think it started, right? So if you watch the actual gold video where all this analysis comes from, I broke down in like 20 minutes these assets, and that's why please do subscribe. Please watch the videos, subscribe to the free mail list so you can get this information, right? There are always two scenarios with price. This, by the way, is gold's highest points, right? This is like the major turning point supply of gold, which is where price is interacting right now, right, so to speak. And when we did the video in the middle of April, I think this is all we had, right? So this is what price looked like, literally something like this in the middle of April. You go back, the video is on YouTube, right? And I simply say, just draw a line here, right? This upward trend line is going to work. There was a slower demand, and I said it's very short term, but you even heard me when I was reading the stuff that I don't really like buying inside weekly supplies, but it most likely would work. And lo and behold, a little bit of the last 2 weeks of April, that's exactly what price did. This demand gets in contact, markets move all the way up, stop loss values protected, you make your money and you get out at a real supply. Now, what do I think is happening with gold real quick? Because I'm assuming this is going to be one of those assets that are going to be flooded on the media. That's why I'm quickly bringing it up today, but we're going to look at NZDCAD in a few seconds. Gold is literally the front face asset again. We had lots of banking crisis. Basically, banking crisis was the theme of 2023, right at the beginning. Banks are collapsing left, right, and center, and we said this was going to happen. We said Powell was over restricting the economy with the rise of the interest rates. We said he did that because he overprinted money, and I'm pretty sure he is in a tough spot now to either keep slowing down, pause interest rates, or give it another 25 basis point, right? Because that whole journey of monetary policy tightening creates a lot of problems, especially for the banking crisis. Remember, another simple crisis that was used, the catalyst was the housing crisis, but in 2008, it was technically a banking crisis. The scapegoat was the housing crisis, but it was banks that created that crisis, right? They ran out of liquidity, ran out of money, right? Helen, the treasurer in the United States, says they're out of money, right? If America goes into these wars that I'm picking up about, this wars that, they need money for that kind of stuff, right? And so Biden is under a lot of pressure right now. And when there is a financial crisis in the market, gold does extremely well. We call it the safe haven effect, right? So in my opinion, and I really hope there's 1 or 2 or 3 365 students who are up to date with that COT data. In my humble opinion, you're going to see on the COT data, I haven't looked at it, but I'm pretty sure you're going to start to notice that in the last 3 weeks, in the last 2 to 3 weeks, I'm looking at the weekly time frame, look at the structure of price. This tells me that sometime towards the maybe middle end of April into May, gold has been slowing down its longs, right? And it's not a change of trend, but rather banks are taking profit. Banks are taking profit on this particular asset, right? So when banks start to take profit, we start to see some incredible red candles, and I think this is the beginning of a short-term downward push. And now this will be the last line of defense. If that fails, then there's nothing that I'm doing in gold in terms of buys until price gets to this area of value, right? So please go back to these PDFs. If you're already signed up for the free emails, it's just clean trading signals that I'm just distributing for swing to position of traders, right? So I hope this gold analysis made sense. I hope you caught this if you watched the first video. If you didn't, then this is most likely going to happen. This will be a good place to take some profit if you're selling. And if price does break this area here, no akuna matata, I would say take your profits from the first sale and then just wait for the usual structures to take place. That is a break of demand, maybe a retest value, and then we go all the way down again. But this selling is not going to last forever, right? This major supply has been hit a few times right now, so we believe that this area here is slightly weak, and we believe that we are on our way to creating a new major turning point sometime in the year 2023, especially if this crisis continue. Right, so my name is Leroy James Maisiri. I'm the head trader of 365 Trading Academy. There are several links down below. One of them is on how you can join us, right? The first one is how to get access to our free mail list, where once in a while I'll send value-based information, not blah 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 trading, actual trades, and I'm looking at actual areas of value that I'm thinking about, and very educational on our trading strategy. The second link is fundamentally around joining us and getting access to institutional supply and demand trading course that has really helped a lot of people and changed some lives. Right. So I want to look at NZDCAD today. Today is NZDCAD day. Oh no, we're talking about gold. I forgot. So I was reading a couple of things just before I hit record because in the mornings I like to leave my mornings open for a lot of information intake, and I thought it's interesting, right? I teach supply and demand. You can see for yourself there, institutional trading, supply and demand, and I love that retail traders always debate about the best trading strategy. But when you look at institutional based documents, I mean, this is literally the World Gold Council research website, and they literally talk in terms of supply and demand. And I was going through the gold demand trends of Q1, right, of 2023, and I opened it up, and basically same with metals today. This is still from the World Gold Council. My session got timed out, right? What I want to emphasize is there is a hierarchy in almost everything in life, whether you like it or not, whether you think it's real or not, it really doesn't matter. There's a hierarchy of information, and if your trading is stuck somewhere, look at the hierarchy of trading strategies and where that trading strategy you're using is, and then consider changing, right? Consider not being stubborn with your money. But if you come read the World Gold Council Gold Demand Report of Q1 and you look at what they're saying in Metals Daily, right, which is what a lot of institutional investors who would read, right? And if you understand the way they talk, it's just basic small-term macroeconomics about gold demand expanding, beating last year's, lower yearly lows, right? And that they actually seen a demand from central banks, institutions, institutional trading. That's really what I want you guys to understand. This is where we derive our information from, right? We want to know, and this stuff is kind of public knowledge, or rather it is accessible to the public, but most people don't even know what to do with it, right? But please master supply and demand. But anyways, this article basically confirms that Q1 saw a basic inflow of gold, right? Gold purchasing, but this time the demand is coming a whole lot more from central banks, right? So the banking crisis, right? So a lot of banks are backing up their reservations of gold. And if you look at gold, again, a financial quarter Q1, as the article says, the demands for Q1, for financial quarter one. I've told you this many times. Banks thinking 3 months. So 3 months is 1 quarter. If you look at gold and you go to the 3 months chart and you look at quarter one, you're going to see something very clear. I'm on the 3 months chart on gold. I've already analyzed gold for you in a 30-minute video. I've already put it down for you in a short-term PDF. I've come back to you again right now. If you look at gold right now and you look at this major turning point, the gold's last all-time high, so to speak, you realize we're weakening it. There is no structure, right? There's no real supply. Here's a supply, here's a supply. All these supplies are now being outdone by full gold bodies. And this financial quarter, filling up the week of last year's financial quarter, and all that it needs to do is to fill this up. And remember, we're in the month of May. I'm making this recording on the 5th of May. That means the second financial quarter of 2023 is not yet over. But the article is talking about the gold demand trends of Q1. When was Q1? January, February, March. It's this humongous candle here that broke these bodies, at least these bodies, cleared out all these supplies, where central banks created the trend. All right, the data is now reflective. It's like, listen, man, it came out today, 5th of May. I'm making this recording on the 5th of May. You can see the Zoom timestamp down there, right? So I get the emails and I quickly do my research and I let my team know what we're doing in the next financial quarter. And it's literally saying, look, man, despite the mixed picture, the central banks and other institutions, the maroon red dots, have bought the most gold institutionally. Have bought the most gold, spot price, holding price, actual stuff there. They've literally, and their reports go back, so you can compare them if you want to look. But I'm just here to give you the information. I hope you use this wisely. I hope you realize that there is a hierarchy in trading strategies, right? So on to today's stuff, because I've really wasted a lot of time. I haven't wasted time. I've just taken time explaining something. I hope you take it seriously. NZDCAD. I haven't traded NZDCAD in a while, so we need to catch up with NZDCAD. Let's see if it's worth. Let's go to the daily time frame just to review last year's analysis. You see these dots here? This is a Fibonacci, and I guess I'm looking at something here, golden ratio area. We'll come back to the Fib. I just want to clear the chart, so the chart is a little bit readable. But don't forget that there was already a pre-marked Fibonacci, and clearly I was targeting some retracement zones there. Right, so we sold NZDCAD last year, all right, that I remember, but I'm not in that anymore anyways. That ended whatever early. Can remove that, right? And then and then price rallied all the way up without me, completely without me. Whether I was sleeping, not paying attention to this asset, I don't know. But markets clearly moved, right? I'm just going to quickly clean up my charts with you, if you don't mind, instead of me just starting full-blown analysis. Just that I'm not really active on this chart right now, so there's no point in overreacting. I would like to see what price made contact with here, so I'm going to forward test, back test, forward test. Was technically back testing, but I'm just moving forward time frame up. I just want to see what's on the left. Right? Okay, so on a weekly area of value, this area where I drew my blue line, you can see there was a value-based demand, right? Clean value-based demand, and then price is just going to give us, potentially, not always, but potentially a price will match, all right? Or maybe you never heard me say this. I'll say it properly. In the instance of value-based demands, and I know I've said it. I've said it here. Here's module 2, our trader's edge, how I compete with the banks in the market. Those with access to the course, you just skip straight to module 2 and you watch the first lecture on value-based demands, the way I break down the psychology of what you want to see on your charts. You want to see retail traders selling, you want to see candlestick basing, and you want to go. It's a 2-hour video. It's a 2-hour long video. Like, I can't even make this up, where I go through so many charts explaining value-based demands, right? So if you lecture 22, right, or in module 2, right, lecture 22 in module 2, the value-based demand is there, right? So generally speaking, with value-based demands, what happens is, and where's my ghost recon? I had a ghost icon just close by on my trade view. I'm using the free base trade view here, by the way, just so that you guys know for a fact that you can use all these tools that is slightly set up differently than my pro account, in the sense that I've pinned, there we go, ghost fit, right? So I was saying, with the value-based demand, not always, right, or not necessarily identical, but you can literally get a mapping up of the previous wave. So if price was to, for example, come back to the valley, right, price has to come back to the valley, this is the type of equal, identical movement you can expect from price. And you can see here, markets came in. Let's make this a little bit clearer, right? So markets have come down. This is where they've made contact with the valley, and then previously it was a little bit shaky. Price came up, came down, and then sparked up, and right now price is coming down, right? And there's a potential for markets to rally, a little bit higher, breaking structure, etc., etc. Goes fee. But when we look at this phase of the market, this most recent leg on the weekly time frame, this to me looks like a flag. I don't know if you technical gurus, right? If you think I only know supply and demand, you'll be surprised. I've been trading for almost 9 years now. But this is what you call a bullish flag. Let me just Google it for you, bullish flag. Right, and a bullish flag looks similar to that, right? Where price will compress. Yeah, there we go. Clean images from Google. And then it's not just Leroy making stuff up. Right, see this is a bullish flag, right? Price creates a valley, right? Prefer being kind of the demand, shoots up, and then has a trend in channel to the downside, Later on, it's going to break out, right? Here's another version of a bullish flag. Value-based demand shoots up, bearish moment, price shoots back up. Bullish flag, right? You get the drift. Bullish flag, right? Price comes back down, has a downward trend structure. That's the flag. So this bullish parabolic movement is what we call the pole. That's why it's a flag. And then markets continue to the upside. We come back to NZD. We've got our pole, flag, and very soon we should expect a breakout, at least on the daily time frame. All right, so that's what we have in front of us, and you can see here I marked a Fibonacci level golden ratio because I couldn't find a weekly demand, and I was hoping to find, because I would really prefer to join the breakout at the bottom over there versus how retail traders get their confirmations, which is a test, because I know markets love faking out somewhere here. Right, number one. Number two, isn't it better to always try and buy low? Right, you'd rather take profits if markets are now really coming against you than buying at a dangerous place where you're going to get stopped out. That's my opinion, and that's how I like to trade it. So I'm looking for a valid demand, and that's why earlier on there were these Fibonacci levels that I clearly drew a while back. And these Fibonacci levels are looking interesting. Why? Because I'm looking for areas of value where price would retrace using an order block. And I found interesting order blocks where we sold during the war room last year, NZDCAD here, when price came back into the supply, which was already marked cowboy last year. Watch the videos. The videos are up there, so you don't have to think I'm making this up. Right, markets created demands in country that supply, which was a clear sign that markets want to go up. Like markets want to go up, markets ain't messing around with anyone. And so for me, in terms of probabilities, it is almost a good enough conclusion to assume that this area here is going to be what we call a flip zone. I don't like trading flip zones when it comes to supply and demand, but I teach them in module 3, which you'll see and understand. A flip zone is basically a previous zone that was meant for selling, like a supply, where markets meet and oppose an area of value, take out the supply and leave a demand. So this zone has been flipped, right? It used to be a sell area and now potentially could be a buying area, right? So if I was to take this trade purely based on the daily time frame, right, we don't even know what this chart is supposed to do. We haven't looked at the higher time frames, right? I would need to wait for something like this. Yeah, if I get something like this, then I'm happy. I'm in. Then I'm assuming that hopefully this would have made contact and then would have a beautiful situation where our bullish flag formation has been done, setting up, and it's now time for price to break up. If you looked at that Ghost Recon, price moves all the way up to some of these structures here, right? Remember where the Ghost Recon that we drew based on the previous value-based demand on the weekly time frame. And so that would be a perfect swing, right? But all of this only makes sense if and only if markets are doing the dance, right? And the dance is sequence alignment, right? Is price purely aligned with the direction I've just mapped out? And we get that by looking at our multiple time frame analysis, right? So let's go. NZDCAD on the 1979, right? Every single candlestick represents 12 months. It's 1 year of trading. Banks think in 3 months, take profit in 1 year, in a 10-year span. We like trading as institutions. We are institutional traders. So this will always be very important to us, no matter what. When I'm looking at this time frame, I'm looking at significant areas of value that price it just left or is about to arrive at. This is a higher big time frame. It's literally affecting the 10-year plan. This chart is not something you look at today and go place a trade tomorrow, but it can start to formulate the story. And the story is there used to be a supply here, used to be, on the 12-month time frame, and this supply was created in 1997. My little brother, the second born in my family, was 1 year old, and now he's a publishing author in his second year of his PhD. Amazing, right? Just amazing how time flies. But yeah, my little brother was born in 1996. Random information, now you know, right? And then markets made contact here in 05. Almost 10 years later, right? 8 years later, markets come back to the supply and then they drop, and then markets come back again into the supply but break it in 2016. From 2005 to 2016, that's 10, 11 years, 10 years basically, right? Banks think in 3 months, take profit 1 year in a 10-year plan. So in 2016, they break a supply. Just like gold, I want to explain it to you again and again and again, because repetition is the power. Repetition is the key. Repetition is the only thing that tells your subconscious mind you have mastery of something. This is banks pushing up. You only make a profit in trading when you take a profit. It's called a take profit for a reason, right? And to take profit means to close the longs, to close the trades, and all of a sudden you have price trending down. Now, I just showed you a bullish flag on the daily time frame. I just did. Here is what a bullish flag would look like on a higher time frame. Very same structure. Here's the pole, here's the flag, and we need to start thinking about retracement areas. If the retracement areas can synchronize, imagine that. If Fibonacci can confirm areas of value from 12-month chart to 3 months, monthly to daily to H4, that would be incredible, right? So our golden ratio area of value is somewhere here. And if you look carefully, price did arrive all the way down there. So if I can, so I'm going to do this. It's just that it's going to remove all the drawings if I do that. So I'm just going to zoom in a bit. So I want you to see this big red candlestick? This is its wick. It's a long wick has already happened. All of this is its wick where we were selling last year. All right. So last year's candlesticks actually arrived into the golden ratio area, made contact with our golden ratio area last year. And in 2023, this is the candlestick that we can't judge yet because it's open, it hasn't closed, but we're starting to get a better picture, a better understanding of where price might be going. Because there's a supply that's already been removed and a demand that's been respected, right? And this golden ratio area, if I have to just hold your hand throughout this analysis, I just want to point out that the golden ratio area fell on top of a 12-year demand. And so when you're asking me who's in control, right, at least towards the end of last year, price was now leaving a demand. Now, there is a supply that markets created, which is this one here. You see this supply there? This one exists. And this is what price created more recently in January 2021, unlike this old supply that was broken. All right, so we can move this over. And here we're just mapping out the tennis court, right? How big is the playing field for price? How big is the zigzag between buyers and sellers? This becomes absolutely important, right? And you can see there, markets hit a demand in 2022, and then markets shoot up into a supply. And then now we have this issue where this candlestick is technically supposed to be leaving a supply and moving to fill the wick, right? That's what the 12-month chart is showing me, that there'll be more long-term selling than buying. If I go to the 3-month chart, I get a clearer picture. Bullish engulfing pattern right there on the NZDCAD shoots up into that supply area that we're talking about. There is a weekly supply area right there in front of us. Multiple touches, multiple confirmation drops. Here's another weekly supply. Without me necessarily clearing my charts, I'm sure you can see the stuff, but maybe let me be kind. Let me be kind, right? So I'm saying there's this here on the 3-month chart, which is a supply, but there's also this on the 3-month chart, which is a lower supply, right? All of this price has finally arrived and is currently negotiating with, right? And by the way, in these videos, I know some YouTubers love teaching, and because I guess their channels are monetized and etc. etc. Mine isn't, right? So I do all my teaching here on my course, guys. It's like 2 hours per lecture, lots of lectures. Here I just want to make sure I'm talking to people who understand or who are willing to learn and understand, how the structure moves, right? If I start teaching, trust me, you will have 4 to 5 hour lengthy videos, and I've done those already, right? So we've got this, a crowded supply on the 3-month chart. Let's go to the monthly time frame. Don't forget there's that bullish engulfing pattern at the bottom there. This on the 3 months is a clean demand. Clean demand here on the 3-month chart. You see? Excuse me, I was having a little sip of something. But on the monthly time frame, it's not. It's not a clean demand. And if I start drawing trend lines and all sorts of things, we'll see, how far price can fall. Because remember, on the 12-year chart, price seemingly wants to fall towards the end of the year. I just want to get back all my zones back, man. It was just easier. It's just that I see through all my nonsense in the charts, and it might help speed up this video since I spent a lot of time at the beginning talking about gold. Apologies. All right, there we go. Right, so on the 3-month chart, we've got a demand, but on the monthly time frame, we don't have a clean demand. What we do have, though, is price falling. And where is price falling from? From a supply, and this makes sense. Now, we're now on the governing time frame, right? So this is now very important to us because in the governing time frame, there was a supply outside, just outside the 3-month supply, kissing that proximal line, and markets broke through it and into a higher supply that was well nested in the 3-month zone. And that's what price is reacting to. And then market stopped here out of nowhere. Like this is the beginning of the month of May, which is still too early to tell how the month of May is going to close. But this is not a supply in here, so we're fine. All right, so price has 2 options to then continue up and say, look, they've already retraced and hit a retracement area and want to go back up, or markets are going to psychologically bounce down before the month of May ends, right? We literally have to wait and see. On the weekly time frame, I'm just looking for something. Again, no weekly demands at play, just a pole and a bearish flag. So it's a bullish flag, sorry, right, with this bullish flag structure, but we don't really have any type of confluence. So that daily demand that we mapped up together at the beginning of this video is a high risk trade area. The pattern might work. That's why we never trade patterns by themselves. It's a bullish flag pattern. It might work, but remember that this area of value is out of sequence. It could work. It's a cowboy area of value. And last year, I remember in my war rooms when I kept pointing out cowboy areas, so many of them actually worked out and made money. I'm not saying that this is one of them. The whole point of coming up with a definition called cowboy is because cowboy means just that. You just don't know. You don't know if you're going to survive it or not. All right. You put your back to back as a cowboy. You walk 10 paces backwards, and you turn around at the same time, and you all shoot. Right. Those old cowboy movies. Right. And one of you lives and one of you dies, or both of you die. You just never know how cowboy scenarios will end. This in its own credit, yes, is a bullish pattern, but there is a lot of heavy sell side structure to price. All right, there's 1-year price, 1-year chart trying to leave. There's 3-month supply in play. There's a weird governing supply that was broken, but a higher supply in play. And there are no monthly demands to catch price, no weekly demands to catch price, and just a daily cowboy area which could make you some crazy money. All right, so just be on the lookout for that. This is a trader's choice. I generally hate taking trades as a cowboy. I generally hate taking cowboy trades. Just to keep my data set clean. I want to have a high win rate, and it doesn't help taking trades that yield low probabilities, right? But this could make some money. It also might not. We've got the Fibonacci working for us. We drew a Fibonacci all the way from the daily to retrace how price moved on the 12th month, and now we're going to draw one here on the daily. I'm drawing a bullish Fibonacci because I believe I have a bullish flag pattern, and you can see that this cowboy area is that sweet spot that markets love, that 50% to golden ratio 61%, right? So this is, yeah, you take it, you leave it, type of situation. I hope you've enjoyed this video. I hope you will consider joining us as a 365 Trading Academy student. We have a lot to teach you, a lot to offer you, a lot to help you become the refined trader you want to be. We are a no bull crap academy. We are no lifestyle, nonsense academy. We're here for well-researched information, and what you do with your money is what you do with your money. Right, I appreciate you, and I'll see you in the next video. Peace.